Okay, good evening everybody. Good morning, good afternoon, good evening everyone. Hope everyone is well. Just do a quick sound check if we can, thanks. Good morning, good afternoon. Alright, sounds like I'm coming through. G'day VJ, FX Trendsetter. Yes, it is VJ, the same opening slide for those that haven't seen it. G'day Wizard, Chalk D, Knight, English Teeth, Interim. So this is the slide from Tuesday. Monday was Queen's birthday, so I took the public holiday off. So thanks guys. Victor, PDF. Thank you, PDF. And so when I have a public holiday, I try to make it up with a stream on Tuesday, Wednesday or Thursday night, my time. And we usually do a question and answer session. I find that those are quite useful. And we certainly get a few questions. We don't always get through them all, but we try to. So I thought this was always, thanks PDF, Mustio Zach. So this was one we had on Monday. I thought this was a good one to repeat. Here's one of my favourites. This is Jesse Livermore. Now, markets have been very range bound, as we've seen leading into the FOMC meeting and also the meeting with Donald Trump and King Jong-un. So times like this, the market tends to go into a bit of a stalling or a bit of an indecision mode. The markets hate this indecision. So I thought this was a good one from Jesse Livermore. I try and produce some of these trader quotes that are appropriate to what's happening in the markets at that time. So what Jesse says here is that in a narrow market, when prices are not getting anywhere to speak of, but move within a narrow range, there is no sense in trying to anticipate what the next big move is going to be. So, we've had price has, we've got our anchor down here. Quite often price will just sit in these ranges like this. And he says here that the thing to do is to watch the market, read the tape. Now, we can't really read the tape when it comes to FX. Read the tape to determine the limits of get nowhere prices. So he's talking about the limits here. And in this case here. So the limits of the get nowhere prices, and make up your mind that you will not take an interest until prices break through the limit in either direction. So g'day Gene. So what he's talking about is basically waiting until price hits the high, or starts to break some of our anchors back here, or starts to break through some of these lows here. So Jesse Livermore is very big on using these as limits. And of course the line of least resistance, as he calls it. So basically what he's saying is when price is in this range here, basically do nothing. As we found, when price is within this range, the price action is very undecided. Excuse me. G'day Moss. Just bear with me a sec, folks. So that's what he means there. So very, very wise at this time, I thought. So I thought that one was very appropriate. And I think also it's easy to make money in a trending environment where most traders get caught, as when it ranges and changes direction. So these are the trading. Good trading is all about staying out when the market is not conducive. And this is where a lot of traders seem to have a problem. Comes down to not following your plan and over trading. So, okay, let's move on. So this is basically Trading Academy plus question and answers. Now, ignore this here. I've already got a heap of questions already. Oops. So just forget that. We've already got a heap of questions. So I'll jump straight into this now. I will also say to VJ, we had a question, VJ, that we didn't answer last time. I overlooked it. Now you let me know if you want me to answer that this time, because we can certainly do that if need be. Now just hang on while I just change screens. No, I can stay on this one. All right, now some of the questions that came through. No, I will discard that one. Okay, now I had some really good questions. Now, VJ, your question was to do with your account growing like a tortoise. Do you remember that one? I won't show it unless you do. So, all right, now a few of we had some great questions. A couple of them were doubled up. Excuse me. So I'm going to do the easy one first. Now the easy one here is from Musty Ozak. That was the one, was it, VJ? So what Musty Ozak has said here, his question is, how many hours per day do you trade? So I would say in a nutshell, let's do the sums. Now I'm probably one of the rare types that really enjoys, when I say rare, really enjoys trading. So in terms of actual trading, so let's call this actual trading, which is trading and execution. Generally no more than probably 2 hours. So this is actual trading. Now, if I've got spare focus around about this time or London Open, so let's call this S for scalping, then I might do another 2 hours maximum of trading. But then analysis and other work, let's call this analysis and other, I would probably do at least 5 to 6 hours. So all up, we're really looking at about 9 to 10 hour day. Now, I spread this over between about 8:30 a.m. my time, right down to about 11 p.m. Now, so you see here we've got 8 till 8:30 is 12. Then we've got another 2.5, so that's a 14 hours, roughly 14 hours stretch. But so there's about 4 to 5 hours in between these here. But actual trading and analysis time, so let's say we forget the scalps because I'm a bit tired for the day, I might only end up doing about 6 or 7. Now, some people might say, well, I didn't leave my job to work 9 or 10 hours a day. In here, this analysis and other, I do a huge amount of study. I still do a huge amount of a study every day and every week because I enjoy it. I thoroughly enjoy it. I enjoy learning about markets. I enjoy bettering myself. But really, if I had to say just trade, Mark, just trade one instrument, it would probably be 2 hours and probably say another 2 hours if it was, say, just Forex. So probably 3 to 4 hours. Right. And some of you that know me, I also mentor. I have my own private students as well. and I do analysis for other individuals as well. So that comes in this time here. But, I absolutely love what I do. I used to do 9-10 hours a day when I was a general manager, and it was a lot of stress. Now I get to do it whenever I want. And, I absolutely love it. But trading an actual execution time, probably 2 to 3 hours. So there you go. So, I've made a career of it. I don't just trade. I do a lot of other things as well. So there we go. So I hope that answers your question, Mastio. But if you're just trading Forex, concentrating on a couple of pairs like Morphus, you can get away with 2 to 3 hours a day, without a doubt. So, okay. Now, because VJ said yes to his here, I'm going to answer his question. This was it here. So VJ said, I'll just get rid of that Mustio, but at the end of the day, trading is up to you. It's up to you how much time you want to put in. You can put a minimum in, or you can put, a lot of time in. I think when you first start trading, you need to put the time in. These people that say, I only do half an hour a day, you got to remember that's probably taken 10 years to get to that point. So you're welcome, Mustio. And, I work from home, as everybody knows. I rarely go out. I've got my own gym at home. I've got a couple of screens down in my gym as well. So, I'm constantly sort of doing it. And, but, I do it because I enjoy it. I do it because I absolutely love it. So, but yes, you got to be careful. Morphs is right. You got to make sure that trading is not just everything in your life. You got to make sure that you have other interests. Otherwise, your emotional, or I suppose the best way to say it is your emotions will be up and down with your P&L. All right? So you got to make sure that you have other interests. You got to make sure you have work-life balance. All right? So now VJ said here, my account is growing like a tortoise. I'm not satisfied with the returns. Nearly I am placing 0.1 lot size, taking nearly 100 pip stops, and I'll open 3 trades only in a week. Will you please answer this in the live session as I'm eagerly waiting your valuable answer? Okay, now VJ. If you're only placing 3 trades a week, now I know some of the markets that you trade, VJ. You've got a couple of options here. The last thing you want to do, the very last option you want to do, is just ramp up your lot size, right? Now, depending on your account size as well, if you've got 100 pip stop by 0.01, okay, well you've just answered my question. All right, so we've got 25 there. All right, so if we're going to risk, say 1 to 2%, let's take the absolute 1%. So 1% of that is $250. So straight away, your 100 pip stop loss at 0.01 on most pairs is probably going to be around, I'd say 90 to probably 150 stop losses. So straight away, VJ, you can probably increase your risk per trade to say 0.1, let's say 0.15. That should still keep within your 1%, but you obviously need to apply your trades your trade size calculator to this. So straight away you can probably increase your size. Now, whenever I recommend anyone increases the size, you do it incrementally. So 0.1, go up in, say, 0.02 lots, which is not much, until you get into around your 0.15 to, say, 0.18, which is probably what your lot sizes are going to be. Okay? So even when you look at this, you're still well within that 1%. Now, there's no problem increasing above this, again, as long as your statistics aren't being affected by these jumps. So what you need to do is monitor and the analogy that I give is the usual gym analogy. All right? Those that go to the gym and lift weights. So you're used to jumping in the gym and bench pressing, I don't know, let's say 150 pound. All right? You're not going to straight away, you're not going to jump to 220 pound. All right? You're going to do it in increments. So you're going to perhaps go 160 for, say, 1 week. You might try that and you might find that that's going well. You're getting 6 to 8 reps. The next week you go to 165, that's going well. Then you might go to 170 and you find, no, that's a bit heavy. You need to drop back to maybe 165 for another week. And then you go up to 170. So you must do this in gradual stages, VJ. Now, we've spoken about this before. Because what this does is allows us to get used to the new risk. Now, what you need to do is monitor your statistics. So if you're getting a constant, say, 55% win rate, you don't want to see this drop down and see your average win, average loss dropping down. You don't want to see that, because what that's going to tell you is you're bringing in too much of your psychology. So the key is going to be, number one, your win rate. Let's say that's 55%. And then, of course, your average win and average loss. Now, this is going to take a couple of weeks, probably a month or more. Let's say minimum of 20 to 30 trades. Yeah, very good, VJ. It's going to take 20 to 30 trades. So you want a decent sample size to know that your statistics are being met. All right? So as soon as you see these statistics being affected, drop back a little bit to allow yourself to get used to it. But the best way, and I've said this before, the best way is to think of R multiples. All right? So 1R. And then, of course, you're going for your 2 to 3 targets. You need to think in these terms, risk multiples. So whatever our risk multiple is, whether this is 1% or 2%, that's regardless. We need to think of these are multiples. Now, I know you're going for big targets like this, VJ, which you're getting. But, and maybe even just get rid of, in your terminal, get rid of the dollar value and just put your pip value in there. All right? So instead of showing, negative 150, it's just showing negative 70, something like that. All right? So get rid of the dollar, because you want to focus on the process of just gradually ramping it up. All right. Use things like your profit factor. That was my next suggestion, Choc D. Choc D said if your strategy only gives 3 trades per week, perhaps he needs to tweak it a bit to try and do more. Now, this 2 to 3% rule for FX, this is all fine when you're confident in your statistics. Yeah, very good, Westy. When you're confident in your statistics, you will know what your curve looks like. Huh? Time. The thing that we're after is this channel. We want to make sure that this peak to trough drawdown doesn't start to blow out, whereby we've increased size. This is our normal equity curve. We want to make sure this is not affected like this because of the extra size. So, knowing your statistics is all important. But once you know what your average win, your average loss, all those sort of statistics, you really should be ramping it right up until you hit your tolerance level. All right? No one's ever told you that. They tell you these 2 to 3%. When you have confidence in your strategy, especially these peak to trough drawdowns, right? Then what's to say you need to limit 2 to 3%? Because this peak to trough drawdown in terms of consecutive losers is going to be the same. Now, I don't recommend that for new traders. I'm just saying you might want to re-engineer it, recalculate it from how much you want to make backwards. All right? And that will give you a percentage you need to risk on each trade. Have a think about that. Those of you that are familiar with Kelly criterion as well, the betting criterion, that's I think it's 8.6%. Right? What you need to do though, VJ, and I know you'll do it, you need to gradually keep going up in stages until you find your optimal risk size. And the way to do that with what you're doing now, number one, as we said, is remove the dollar value and just have the pip value. You might find you'll be surprised after a month that it actually looks better than what you expected, because our mind automatically flicks to worst case scenario, because that's how we're built. All right? And the other thing is, yes, try and expand either your setups. You're welcome, VJ. Either expand your setups where you're taking different setups. I know you're an Elliotician as well. Expand your amount of setups after sufficient back testing, of course, or trade some other markets. Try some other markets, because then your 2 to 3 trades a week will be more like about 6 or 7. All right. Okay, very good, VJ. So, and look, guys and girls, I think probably VJ is probably a great example where, he's trading within his means and he's gradually working his way up. He's testing his strategy, works, and he's slowly expanding out. This is what you have to do in trading. Yeah, very good, VJ. You have to master one setup, one strategy. When you've mastered that, apply it over different pairs. Get used to, 2 or 3 pairs. Don't chase too many rabbits, as they say. Master one thing. All right. But you have to get used to the new size, and it takes time. When you get into this drawdown period as well, just stick to your plan. All right? The one thing that I suppose the most important thing to do once you know your plan is back tested, in your post-mortems, make sure you're trading to your plan and make sure you are taking your exits according to your plan. I guess that's probably a simple way of saying it. So there you go. Hope that helps, VJ. I'm sorry we missed it last time. All right, now, how are we going for time? All right, now I've got a question here from Choc D and from Interim Investor. Now, these are pretty much the same questions. And then one from Marxist Trader. I'm going to do Marxist Traders very quickly because I think this is probably a little quicker. So Marxist Trader said here, he said, I watch your videos on why 70% breakouts fail and on complex pullbacks, avoiding pitfalls involving price action coming up to key levels. On the other hand, Forex trades 24/7. Traders need to sleep, may have other jobs, so we may have imperfect information coming before a breakout. What are some ways to reconcile this with the ideas in the videos? So that's a great question, Marxist. And there's no real easy way around it. Missed trades are just part of trading. So we might have price comes up into our breakout level. So we're now watching. So price has done this and maybe it's just kicking up. And this is our time zone. Now, you got to remember that some of the trades that we look at also, most of ours are in Asia. So a lot of them don't trigger anyway. So what we're waiting for is obviously price action to come in here somehow and give us our breakout entry. All right? So we've got permission to take that because of this structure through here. Now the trouble that we have, and I have this all the time as well, is this structure here quite often will form when we're away from the computers or something like that. If you can, the best way to do it, one of the best ways, is to set an alert just under the breakout level. So when price starts to approach this level, if you can, have a look at your charts. It's no good when price has done this here, just to set a breakout order here. Because we might find that all of a sudden it comes down, then bang, it goes straight through. Or, worst case, it comes straight through and a fake out and then down. So we're waiting for price action to give us the sort of patterns that we want under here. All you really can do is monitor what you can. Maybe go to a higher time frame, 4 hour or 60 minute. And perhaps only take those trades that are setting up in these time slots, because I know a lot of these will actually give you really good entries on a 15 minute. But seriously, it's hard to do that. I mean, I miss more trades than I take because of that. The other choice, when you think price is looking not too bad in here, or something like this, you may just have to set a smaller order, maybe 1/4 of your position size. So at least if it does break, it gets you into the trade. And then if it, for some reason it fails, well, you've only done a quarter of your normal position size. And let's hope that it gives you another opportunity to build the position down the track. But Marx's trader, there's no easy way. There's really no easy way to do it. Alerts, just watch the price action closely. Let me show you one here. We looked at today. Here it is here, Singapore yen. See this here? It's level here. All right? You just got to put it out of your mind. Right? And if it doesn't, think of it this way. Here's a good way to think of it. If it doesn't set up when I take it, when it's ready for me, it's not meant to be. It's not my trade. All right? See, here's Singapore yen here. See, it's setting up here. So now this set up reasonable, see, about an hour, probably 3-4 hours ago. So you could probably take this one, see here, with your stop being down here. That's only 15 pips. So knowing that, or put your stop a little lower. Sorry, Forkers, maybe I didn't explain that properly. Well, here's one here. Let's do this. So here's a good one here. Come on. Sorry, folks. The mouse gets a bit funny. Here we go. Right. So this is Singapore yen 1 hour. This is probably a good example. So here we've got our small cup with handle. When we've got this set up in here, and we price is probably back here, there's nothing wrong with putting your breakout entry trade here, because we've already got partial what we want to see. We've already got part of the accumulation in here. But what I would do is probably set your stop down a little bit here to allow for a little bit of a shakeout down here. But we're already getting some of the price action we want to see in there. All right? But there's really no easy way to do it. But I wouldn't take see, this one here is a bit sloppy. I wouldn't put a breakout order here. You want to see this here. Now, where's another good one? We looked at another one today that Swiss yen, right? Here it is here on the daily. So we've got our anchor across here. Sorry, just support and resistance across here. Here's our 4 hour. See price has come down and moved in hard here. This is one where you wouldn't take it. Right? So you wouldn't take this one because it's too sharp. Those of you that have seen the breakouts that we take, right? This is not bad. This is a 4 hour. We're starting to get the price action we want to see. So worst case scenario, you'd have to set this one. That's a 50 pip stop. All right? But the price action here, no. See, this is too sharp. But see, we're already getting something reasonable in here. Yeah, that's it, Forkers. All right? I put a lot of orders in the market, even just tiny orders, 0.02, 0.05, just to trigger the trade in, and then I'll start adding to it if it looks good. I'll start adding, decent size, but if it falls apart, 50 pips, what have I done? $25. Right? Yeah, what it does, it triggers it in, and what it does, it forces me to take note of it. Right? So here's the setup that we looked at today. This is from our watch list today. There it is there. So here's the watch list we put out today. Swiss yen long. And there's that Singapore yen long as well, down there. All right? So see, we're getting a bit of a setup in here. So, there's nothing wrong with this one, because if it doesn't, quite often it'll come up and it'll just fall away. So there's no real easy answer to these. All right? I miss a huge amount. But what I do is I set a lot of contingent orders. All right, here's an equity. See this one here? I wouldn't take this one. I wouldn't set an order there. There's not enough accumulation before it. There's the stock. But if I saw something like this higher up, yes. Yeah, I do, Pipster. I did that one today. Now, it was incomplete because the market's just horrible. But you can have that. Right, normally I fill a lot of the detail in, but it was just the market was terrible. There it is there. All right. So I didn't want to put it in as an actual trade idea in other, because it just wasn't. The markets are just not good. So I hope that answers that one. You need to go and follow me, Pipster. Follow me and go and have a look back through my trade recommendations and my watch list. You'll see how we normally do it. We do it a bit better than that. I'll show you. And there's the one from last week. So most of these moved in our favour last week. And there it was when it first came out. Monday, I put this one out. So there was the key levels. Because a lot of these don't trigger in my time either, all I can do is put the key levels a lot of time. There you go, there was even one on the S&P 500. See there? That triggered. That was a great trade. Most of these were good. The only one that didn't trigger in our favour didn't even trigger, was Aussie New Zealand. These others did by the end of the week. So there you go. All right. So I hope that there's really no easy way. The easiest way is to just look for what we look for. Now, those of you that have seen the webinar, you know what we look for in terms of the breakouts. Here's just a little excerpt I took from the webinar that I post with the trades. So they're the breakout examples that we look for. There's a PDF there. All right. Here it is here. All right. This is what we want to see. This sort of structure. Bearish. See here? All right. There's some examples. See this here? ABC before the breakout. See it there? Go and have a look through this. Here's some out of my playbook. See this one here? Have a good look through this. Look at this one. See the low volume. All right. If you're not a full member, you may not have access to this. Well, there's a whole 45-minute lesson on this. What to look for. These are the best types of breakouts. See here? That might encourage you to sign up. All right. Okay, now we've got a question here from Choc D, an interim investor. Now I'm going to combine these two or three. So what Choc D has said here, a question or three. He said here, you don't seem to mention longer term horizontal support and resistance much, i.e. from say 6 to 18 months. All right. Well, I actually do, but I don't put a lot of it on the chart, because what I don't want to do is clog the chart up with too many lines. So if you look, you'll see me pause and just look at levels on the chart. So I'm not going to put them in unless they're relevant. So see these from this week? See here? These are relevant. So they're in. And I didn't cherry pick this chart either. They're the only two. Because they're within the price action. I don't like having too many support and resistance all over the place. My charts are full enough as it is without having too many more. So see, we're watching minor resistance here. And then there's major resistance here. We said this. So what I then do, the ones that are relevant nearby, then we put them in as zones. See this here? And we even said about this one, I said that this is not far to this one here. Right? So look at Swiss yen. Sorry, we're still looking at, look at the weekly chart. Look at this here. 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 All the way back through here. You probably just don't see me doing it, Choc D. That's probably what it is, okay? When you see me just sitting there, just saying nothing, I haven't fallen asleep, or I haven't drifted off, I'm just looking for nearby support and resistance. All right? You see we've marked them, all right? See? So, now a lot of these will line up with the anchors. So this is actually a good example, this one, because this is recent. So you can see we've got them on the weekly, but I will only refer to these when they're nearby. Otherwise, I'm not interested in it. You know, we spend quite a bit of time in the streams anyway, and it's pretty full on. The last thing that we want to do is go and pull out support and resistance all over the place, because quite often it's just not relevant. And you see the way I do it. You know, I flick from the line chart, sometimes use Gann swings. You've seen me do it. So, You don't seem to mention. Well, I do, okay? I've just said that. All of your levels of importance seem to be drawn from recent anchors. Okay? The reason we're doing that is because they're determining the trend. This is the objective method that I use to determine the trend. Once we break the trend, see here, in the daily, here's the anchor right here. Then I'm looking at the next ones for support and resistance, yes. See here the bullish reversal swing? See the fake out here? This is where you wouldn't take the breakout. Let's have a look at that one. See back here? Not enough accumulation. Straight back. What I'm interested in, like with this one here, is not trading straight into it. See here, this is a major level. We mentioned this. I said if you take this, watch this. Okay? So, the levels of importance are the recent anchors. Yes, they are, because I want to see when trend is continuing. Yeah, Shrewd. Shrewd has said, I like the current channel. They are most helpful as that is where the most people are watching. A break of the trend line, the channel resistance is actionable. Yes, absolutely. So here's our euro dollar. Here's the latest anchor. See here? See, price is really struggling here. Here it is here, see? That demonstrates how valid this is. So these are my time and price zones as well. Now, see the support and resistance here? So you may not be able to see those on my charts. It just occurred to me. Well, there. Sorry, it just occurred to me you may not be seeing them as clear as I can. All right. So if we get time, I'll mark up the chart with a thicker line. So when we drill down to the 4 hour, yeah, okay. All right, we can see why. You see, Choc D, if I put too many of these on the chart, you see how it gets too messy? That's why I don't. But yeah, sorry, but I will for this example. So then when I drill down to the 4 hour, so we're still watching the main anchors. See this here? See where price is pulled up? See how valid it is? That's all important. Let's see here on the 1 hour. See the break here? See the push was too sharp? Needed more time. Now here's a great example. Marxist. See this structure here? If I saw this much of it, would I put a breakout order in there? Yes, probably. All right, 30, maybe 35, 40 pip stop. Because also, look at the structure before it. Now, I'm not sure whether my PC is lagging either. I know, it looks okay. All right. I mean, this is all the benefit of hindsight, of course. So that's why I use the anchors, Choc D. A lot of these trends are trying to reverse. See this here? We got a break of the trend line here. So that puts me on alert. But this is now looking just like an A, B and a C. Or an A, B and a C of a flat. I don't know yet. but our nearest anchor is right back here. This is why I give these importance and value. And you've seen when I've marked them on the watch list how valid they are. See this one here? See prices coming back to them. These are valid trend change points. Can you see that on euro dollar? See the amount of times this has been tested. And then finally, the break. See here? Retest. So support becomes, resistance becomes support. Here. Doing it again. All right, euro dollar. All right, see the big chop zone it's in at the moment. We don't trade these. Jesse Livermore. All right, here's his boundaries. This is exactly what we spoke about before. These are the boundaries. Euro dollar, 4 hour. So that's why I use the anchors. Choc D. Do you feel the longer term levels are relatively unimportant? No, definitely not. Longer term levels are stronger levels. Euro dollar. Look here. Long-term level, weekly chart. Now, what adds weight, though, which I'll talk about in a moment, is the fact also we've got the base channel, trend line, right here. All right, so that's adding weight. Just bear with me. Something's lagging my PC up. So I use support and resistance with other levels to give me confluence. That adds weight to that particular level. All right, euro dollar. So long-term levels are extremely important. So you've got here also, are they less important than trend lines? No, I would say they're more important because thankfully you guys have been taught how to draw trend lines properly, but not everybody does. See this here, even this channel. See here? See price has tested the channel, bottom of the channel. And you've seen how accurate the trend lines are we draw. When you can draw them properly and you see them come together, it strengthens the level. How am I going, guys and girls? Am I still coming through? All right, so yeah, absolutely. In terms of so they're all part of the picture, right? Trying to create weight of evidence to support that level. You're seeing here on euro dollar. I'm looking for this to pull up here. I've got an anchor, or we could call this minor support and resistance. I've got base of my time zone here, my time and price zone. Thanks, PDF. All right. So So they're all equally important. Right, also, I note you use candle highs and lows to draw your trend lines, but Andrew teaches using closing price is best. Okay. In order to draw a trend line, we need a valid trend. You've learnt this in the academy. Valid trend is made of peaks and troughs. So what do peaks and troughs take into account? Extreme highs and lows of price. Okay? British pound. Try and look for some good examples. Well, we looked at this morning. British pound, I said it was weak. Here. Price is testing and milling around it. This is probably not a good example. There's a swing here as well. Let me find a better example. Well, there you go. There's the top. Look. There you go, across the top. Well, there's our channel. Well, so when I put my channel across the top, I project that down accurately using channel rules. Look at where price is pulled up. Yeah, I'm going to do that in a moment, interim. So interim investor said, I may have misheard, but I thought you said draw support and resistance on a line chart. I'm trying to understand the importance of wicks in support and resistance. Can you please advise on this? Yes. So see, back here, Choc D, here's our anchor. There's one here as well, but here's another one. So it's a zone. Right, so see the importance? Your line chart may do it, but that's how we were taught. Right. So I use swing highs and swing lows. Swing high and a swing low takes into account Marcio. No, not really. Right. Here's a bar chart. When I place GAN swing tool over it, this is according to WD GAN. Yeah, it's in there. Sorry, Pipstar. Yeah, it's in the academy. Now, this is trend according to WD GAN. So this is all the swings according to WD GAN's rules, highs and lows. See this? When I draw a swing chart. Come on. Right, when I do WD GAN swing charts, highs and lows. See this? These are extremes of price. Yeah, it wasn't a zigzag. When I do point and figure, right? highs and lows. See this? Extremes of price. Okay, so Interim Investor has said, now Interim Investors also, you've asked a question about stocks here as well, which we probably won't get time to do. So Interim Investor said also, his question for today is about support and resistance. So can you please spend time on why support and resistance is important? How do you decide the support and resistance lines? Are there any pitfalls, things to consider when drawing support and resistance? How many support and resistance lines to draw? What time frames to draw this on? Now, these are great questions. These are fantastic questions, folks. Really good. All right, now I did answer that as well, I think, but very similar. All right. Quite often on the bigger time frames, Chalk D, what it does, using a line chart, you've seen me use a line chart as well for support and resistance. What it does, when there's a whole heap of prices close together, it cuts the noise out, okay? What you need to do with a lot of these as well is go and test it for yourself. When they're very close by, like this one here on the euro, see here, I use the, all right, when there is a lot of chop, see in here, support and resistance zones, see this here, then I'll flick to the line chart to get the top of the consolidation, see this? I'll come back to this in a moment. That's when I'll use this because it's easier to see. See through here? And then what I quite often do is just tweak it slightly. So you can see this is captured most of the wicks anyway. See that? Euro weekly. So we can actually even extend this out. So what I've done is I've created some important points for us in regards to support and resistance. So let's read through these. So yeah, you'll see, Chalk D, you'll see when we'll do a pair, and then we will go through and we'll put the support and resistance on them. Let me just answer a couple of Interim's questions. All right. Yes, I do, Richard as well. So, important points. Support and resistance represent a concentration of demand and supply sufficient to halt a price move, at least temporarily. Support and resistance. Support and resistance does not automatically imply a reversal, but are intelligent places for anticipating a reversal and should always be used in conjunction with other factors. So the other factors are things like trend lines, a few other things that you've seen me use. Support and resistance create the structure for price to move, market structure. Because the most obvious spots on a chart. Right? Price moves within this structure. Right? We're creating the market structure, and the reason being, which I'll get to down the bottom here. So support and resistance create the structure for price to move within, because these are the natural boundaries. Natural support and resistance are the natural boundaries to price. They're the most obvious. Support and resistance levels are not precise levels, they're more like zones. See, I draw the blue zones on mine, because price will either quite often overshoot, or undershoot. So the concept of reversal of roles or change of polarity. Now, I'm going to use this in the Trading Academy as well. So you've got an early look at it. That's okay. So the concept of reversal of roles or change of polarity applies. In other words, support becomes resistance. Most of you probably know this, whereby price pushes down, pushes back down. Price will quite often retest that point. Right? Change of polarity. Same on the way up. Price comes down, test this point. Right? So the concept of reversal of roles or change of polarity applies. Support becomes resistance, etc. Now, potential support and resistance zones develop at previous highs and lows, round numbers, trend lines and moving averages, emotional points on charts, and retracement and extension points such as Fibonacci or Gann proportions. All right, we won't get into this, but these ones here, round numbers, previous highs and lows, round numbers, trend lines. These are static support and resistance. People say trend lines are dynamic. Well, they're not. They don't change. You redraw them, but the old one is still valid until it's broken. Okay? So that's a little bit of a misnomer. Dynamic support and resistance, however, is moving averages and anything else that moves with price. Right? Like a Bollinger Band or something like that. So emotional points on charts, round numbers, static support and resistance. So, let's go a bit bigger with this one. The significance of a support or resistance zone depends upon the volume or amount of transactions at the level. Right? So we can't see this in Forex, but I use other tools such as Market Profile and Stoudemire. You've seen me use that. Now, the significance of or strength also depends on, now this is a key, the speed at which price moves away from the level. Trader's urgency to act. See this here? Price moves up. Price is coming down. Price pushes hard into the anchor and gets rejected hard. Well, I can guarantee there's going to be a lot of volume is transacted in this point here. But more importantly, demand is well and truly overwhelmed supply in this sharp move here. All right? So quite often there's big orders here that haven't been filled. And this is where price often will come back, test part of this level. All right? Same with on the way up. Sharp move down. Supply has well and truly overwhelmed demand. Now, we spoke the other time about the inefficient moves. This is one of them. So the speed at which price moved away from the level indicates traders' urgency to act. The sentiment is well and truly bullish. Everyone wants to get in. But when price comes back to that level, in this case here, price has moved sharply away. When price comes back to it, you can guarantee there's people that want to get in because they missed their chance. Here's another one. Recency of levels. Euro dollar. Recency of levels. Yeah, often shrewd. Right? The amount of time times the level, the amount of times the level is respected. And the significance of support and resistance zone depends on also, quite often, round numbers, all-time highs and lows. All right? So this is your criteria. All right, let's have a look. Let's pick a pair. First, somebody mention a pair, the very first pair. Night. All right, Night got it. EU, we're on an EU. Euro. Okay, bar chart. Euro dollar. Now, there's one question here that Interim said as well. Time frames. Those of you that have done the academy, no, let me do it here. If you're trading swing trades, high time frame is a weekly. Your trading time frame, generally the daily, lower time frame on which we enter positions, 4 hour and the 60 minute. All right. So we're going to take our support and resistance generally off the trading time frame. Weekly, yes, but our trading time frame daily, if you put too many lines on the lower time frame, you'll never make a decision. If you're a scalper, which I am also, Your higher time frame could be a 60. Your trading time frame could be 15 minute. Your lower time frame for entries, 5 minutes. All right. Trading time frames that I trade off. Well, 15 minute above. I'll use a 60, say 30, 5 and a 1. 5 is a bit too noisy. So the higher time frame, I use the 30. Just gets a little bit noisy. But let's consider these two, this one. Weekly won't give you enough. Daily is just about right. Lower time frame will be too many. So, euro dollar. So, the major obvious levels, you can go back as far as you like. You can see we can't go back too far with this one. What I do is I put in the major levels. Right, this one, you can clearly see across here. Got 2 across here. Got 1 across here. Right, now you don't your support and resistance any closer than about 50 to 100. How do you make a trade order? So these are the major ones. See the major swings. Right? What I don't do is take into account a lot of these ones unless they confluence with some of the others. All right? So if price was pushing up into this area, now see when it gets all jumbled here? It didn't have all the data. All right, we'll do this area because we know its price has been back in. All right, we'll see how well that worked there. All right, I will put the obvious one of this one, and then I'll work my way through here using the line chart. So you can see how well it actually picks a lot of these up. Marcio, I just read this out. Did you see that? Or did you maybe come in late? So then the line chart is useful, see in areas like this here. So what I'm looking for is the amount of times with these smaller ones. All right. So here's a larger one here. It's been respected here. Yeah, I thought you might have. That's all right. So this one here, see it's been respected here. Oh, there's a couple across the top here. There's a couple up there. See these? So what you'll find is any ones kind of from back here that are valid are going to be respected most of the time in the most recent moves anyway. Right? So there's one kind of cuts through here, here, these ones here, and this one here. Right, so that's that area. What's the closest one? It's about 100 pips. Right. So let's go back to the line chart. There you go. So it just cuts out a lot of the noise. What I might do then is just go and adjust them slightly to take into account, see the swing highs here, 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 here. So let's have a look at the most recent price action in here. Oh, that won't move across. All right. There's no zoom in between, is there? So you can see the obvious ones, right? You need those. Now see through here. See, these ones are valid because the price has moved away hard, but I prefer to see it in these areas. These two. All right, now see on the line chart, takes a couple of those better. See how that lines up. It's got this one. Yeah, no, that's worse. All right, so I'll be happy to place that one back in there. And then I want to see the extremes. So you can see here, this is really a bit of a zone in there. So let's have a look through the guts of the whole thing. One here. It's been respected there. One there, two. Here, 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 and here. That lines up pretty good with the line chart as well, see that? So these most recent ones in this leg here. They've pulled up there. Now, incidentally, if any of you are from Melbourne, tomorrow night I'm guest speaker at the Australian Technical Analysts Association meeting in Melbourne, 7 p.m. An hour presentation I'm doing for them. So tomorrow night, Ibis Hotel in North Melbourne. You're all welcome. You don't have to book. It's free entry, $25 for dinner. There's about 6 or 8, probably about 8 Forex Signals folk coming. So it'd be great if you could join us. Right, see here, one's valid here. Now even this one here, I'm going to put this one up slightly so it takes into account these two better. All right. 3 pigeons. All right. So you got to pick out the most obvious ones through here. This is a bit of a tough area. You just got to pick out the most relevant, but also I'm trying to give the most recent ones because these have been respected. And there's one actually there too. See that? See that one there? That's valid. There's a lot in here. Yeah, this is a nasty. Here. Let's go in between these. And I reckon that'll do. See here? Try to take in the majority of these. So there we go. Yeah, there you go. They're about 100 pips apart. You don't want them too close because you'll end up with them everywhere. And if you're looking, now see most of these here have been tested recently. It means the traders are seeing these on a more recent basis. Whereas if price just pushes through one a few times, doesn't respect it, kind of loses its validity. All right. All right. And then I get a little closer and I'll just adjust it up. That one looks pretty good. All right, there. You see it's been respected. And where did that come from? Was that it there? Yeah, there it was. Oh no, it was there. Oops. If you want going forward, price was to return to these areas, really, I just use the main ones. So line chart just makes it easy to see. All right. Yeah, a lot of times PDF they will. All right. So, look, it's not an exact sort of science. You just got to get it as accurate as you can. All right. That's why you generally sort of treat it as a zone. So that's not too bad. Let's have a look on the 4 hour. Yeah, that's reasonable. We tweak this one up a bit. There's nothing wrong with that. Right. The most recent price action is what's respecting it. You can see this one here. We drew this one. That just so happened to be the anchor from back here. So there you go, guys and girls. Not too many. There's probably another one there. Now, if I was using that 60 minute and I'm scalping, so drawing your support and resistance on the higher time frame is worthwhile for your smaller time frames as well. If I was using the 60 minute now, this is where I'd put them. Right, same with the 60 minute. Across here. Through here, so the green is 60 minute. That's a major. Your major ones will be probably 100 to 150 or more. All right, the most obvious sort of places. Well, probably there. This is on a 60 minute now. Right, 60 minute, no more than about 15 or 20 pips apart. There you go, 15. So if I was scalping this chart, here is my structure. And you'll find when you scalp, the more recent ones is what people are seeing. Right, so they're all valid. There's another one. So the same thing, but just on a smaller time frame. I don't even know where they sit. Oh, there you go. There's a couple of good ones. You can use that to get slightly more accurate. There you go. See, that looks pretty good from what we've just done. Oh, you might tweak that up slightly. There's the bigger daily one. See how accurate it is even on a 60 minute. So it's obviously a big zone through there. 10 pip zone. You can see prices. But, you know, don't be too concerned if you're 5 or more pips out. So you get areas like this, is pretty tough. Really concerned. You know, so there you go. So if I was scalping this chart, there's my structure. How's that, folks? So use both. You can see I use both charts. You can see our daily in pink, how it got respected. And then we just tweaked it for the 60 minute. This is a 60 minute chart. The euro. All right. So, you know, looking for trades in here. long trades. There's nothing really above. There's a little bit of minor support, minor resistance there. But seriously. And then if you're trading this, on your 15, you've got your swing highs and lows you need to be careful of. Right? But it's the bigger ones that are going to hold price better. Right? So looking for long within this structure. Watching this area, then of course watching back up here. If we break lower, there's a little bit there. If we break lower, it looks reasonably clear down to here. Right. Major swings, most prominent ones. So really in there, you've got 70 pips. So there we go. All right, I think we got it. What time frames? We've dealt with that. How do you decide? We've drawn them. Any pitfalls, things to consider? Yeah, don't draw too many. Take a little bit more, like an exponential moving average. Give recent price a little bit more weight. Because if a support and resistance zone is valid, you'll find it getting respected in recent price action. See here on the daily now, you just couldn't trade this. See this though? So draw your support and resistance. Draw your support and resistance relevant to the time frame. So here's our 4 hour. There, even the 4 hour, pretty good. Right? Taking into account most of those on the 4 hour. See there? So just get used to drawing them. There's across the top as well. Give a bit of weight, more weight to recency. See here? See the high here? There's one here, there's one here. These are only minor, but it's pulled this level up here. All right, we better leave it there, folks. That was a bit of a marathon. That's all right. It's all good. All right, well, we dealt with a lot. There we go. Yeah, the 35 WMA, 30 WMA, very similar to a 21 EMA. All right, very good, folks. All right. So just be careful, folks, tonight. You can see price is just stalling out. Not moving real well. Let's have a look at some of those other trades. We'll keep that one. So you only draw the ones that are relevant. Otherwise, if we're trying to work off this with you guys in our streams. No, it's a bit late, Marcio. It's 10:30. Although I have been known to go to the gym. That's all right. PDF, you're welcome. You can see here, if we kept these lines on, our charts, it'd just be too messy. So try and keep your charts clean. There you go. Here's this Swiss yen. Look at this. Not bad. So we've got our pullback here. Coming up to this level that we said. They're cut with handle. There you go. See it there? Just be careful there, because here's our resistance. About 30 pips away. Now, sorry, I forgot to mention also, the reason I pause and let a lot of trades go is because there's too much resistance is too close. You don't want to trade straight into it, right? The beer flag, says Marcio. The beer flag. Yeah, he's gotten trapped by the beer flag. Very good. Now, what was the other one? Singapore yen we looked at. There you go, look at this one. Even though price action is very grindy, still, this would be a good one. Watch this for your break. Singapore yen. Right, our daily chart. Where's the support? Where's the resistance? Right here. They've marked it. What else have we got? Nothing. There's some fibs. Right, not much else in the way. Not that I can see. There you go. See this one here? Here, here, here. Oh, and look here and here. So there has been some. Another one above. Couple here. There you go. See this one here? I can just tweak this up a bit. Yep, that's better. See it there? Yeah, that's a great example. Oh, there you go. There's a great example. Where are you? There you go. See, I'll just tweak that up a little bit then. It's a few days, little while reasonably old there. Here, it's this one. Now this one here, it's not really, there's really nothing else. But this could be considered a zone. So there you go. So we've now got our 61 in here as well, right here. So when I look at price, there's our cluster, which we saw anyway. We've just tweaked it a bit. So we had that on there originally anyway, just to be careful. Not a huge amount of room. But these are just, remember also, these are potential support and resistance. I mean, don't take a trade right into it 10 pips away, is what I'm getting at. But the structure looks good. It's not bad. Let's drill down a bit. 15 minute. Here's our trend line. 1, 2. Do you reckon that's valid? Price is correcting sideways through time. Got a little shakeout. Price getting higher. Demand coming in here. This will be a good one to watch, this one. Just remember that level though. Right, so the higher time frame structure gives us where we can move. Look at that. Nice cut with handle. The idea with these also, so I haven't said before, is to get in here if we can. Here's the anchor break right here. See there? See, price tested it. It's an hourly chart. See it there? Get up there. Right. There's the there. See, tested it here. Retested it. Came back and retested it from the top. That validates, shows us how valid that is. There's a whole hindsight, of course. So there we go. So we've seen a couple. It's quiet, but already this is better than our Asian sessions. We've got the worst time slot here in Australia. All right, everybody. Might see some of you tomorrow night. But if not, I'll see you tomorrow anyway for the Asian session review. So, all right, everybody. Thanks for your company. Enjoyed that. It's always good. There's your accelerated trend line as well on the hourly. Price has created the peak. So it's coming back to it. All right, guys and girls. Trade safe. Talk to you soon. Bye for now.